The bullish tendencies of S&P 500, Nasdaq and Dow Jones seems to remain present despite some mixed signals being sent over the past week. In this report, we are to discuss primarily the fundamentals surrounding US stock markets, but also the upcoming earnings releases, and finish off the report with a technical analysis of S&P 500's daily chart. Before we have a look at what lies ahead in regards to financial releases, we note that the easing of inflationary pressures in the US economy during June, as the CPI rates tended to slow down for the past month. The release was somewhat contradicted by the acceleration of the PPI rates for the same month, yet we expect that should there be further signs that inflationary pressures are on the retreat in the US economy, we may see US stock markets getting some support. Furthermore, we note that the demand side of the US economy seems to be resilient, as the retail sales growth rates for June came in better than expected, with the core rate even accelerating on a month-on-month level. Further signs of strong demand in the US economy could add more support for US stock markets. Today, we note that the release of the US industrial production for June and tomorrow July's Philly Fed Business Index. Should the indicators' readings come in better than expected, implying also some resilience for the production side of the US economy, we may see US stock markets being supported. The easing of inflationary pressures in June, in conjunction with a cooling of the US employment market for the same period, intensified the market's current expectations for the Fed to start cutting rates in September and deliver another 2 rate cuts within the year, one on November and one in December. The intensification of the market's expectations tends to add more pressure on the Fed to ease its hawkishness, something that may have been implied by Fed Chair Powell last week. Should more Fed policymakers ease their hawkishness and maintain a more dovish outlook for the Fed's intentions, we may see US stock markets getting additional support. We tend to view Fed's monetary policy stance as the key factor behind the direction of US stock markets, along with the market's excitement for the possibilities offered by AI. On a deeper fundamental level, Saturday's assassination attempt on former President Trump may have enhanced uncertainty somewhat, yet that effect calmed down quickly. On the flip side, the unsuccessful attempt seems to have caused a rally around the flag effect for Trump supporters and thus enhanced the possibility for him to get elected. Should market expectations intensify for such a scenario, we may see riskier assets such as US stock markets getting some support, as in parallel, the market's expectations for the Republican to return to the White House and deliver tax cuts could strengthen the optimism of the market. As for earnings, we note the release of the relevant report for Netflix tomorrow, yet the heavy point of earnings releases is expected to be next Tuesday, when we get the earnings report of Microsoft, Alphabet, Tesla, Visa, Louis Vuitton, Coca-Cola, General Electric, Philip Morris, and General Motors, among others. We expect attention to be set primarily on the big tech companies Microsoft and Alphabet, which could also be setting the tone for US stock markets, given the AI frenzy dominating the markets. The S&P 500 timidly broke the 5,650 resistance line yesterday, reaching new all-time highs, yet corrected lower during today's Asian and early European session. Despite the correction lower, we tend to maintain our bullish outlook for the index as long as the upwards trend line guiding the index since the 19th of April remains intact. Also, the RSI indicator is currently running along the reading of 70, implying a strong bullish sentiment among market participants, yet at the same time may be implying that the index is at overbought levels and may be ripe for a correction lower. Similar signals are being also sent by the fact that the price action is flirting with the upper Bollinger Band. Should the bulls maintain control over the index, we may see it breaking the 5,650 resistance line, clearly thus entering uncharted waters once again and set as the next possible target for the bulls, the 5,850 resistance level. Should the bears take over, we may see the index initially breaking the pre-mentioned upwards trend line in a first signal that the upwards motion of the index has been interrupted, break the 5,440 support level and set its sights on the 5,200 support base. Those were the top financial stories for this hour. From all of us here at Iron FX, we wish you a solid trading.